Good morning, Senator Agriculture. It's Thursday, April 2nd. We're going to start off the morning talking with the Department of Taxes. We have laws and rules in place, and when people miss deadlines and all that stuff, there's penalties that end up happening. It's people get unhappy and they come to us and they ask us what we can do and all of that. And we really can't do much until we understand all of how it works. And that's what we're trying to do today, is to figure out with some of the situations that we have, if we can find a workaround with our folks that work hard collecting and administering and all of the taxes in the state of Vermont. So we're going to start the morning out with Will Baker, Director of Legal Services, and Jill Remick, Director of Property Evaluations and Review. Good morning. How are you?
Good morning.
Welcome, and appreciate having you folks here today. As I've said, I think that you guys are pretty aware of some of the testimony that we've taken, and maybe you felt like you got beat up on, but it is what it is. With that, that's not our intent, not at all. We want to find out if there's a way that we can work around some of the problems that some of our farmers who really kind of fell into maybe a little bit of a area where they're supposed to know and they didn't, or whatever. But before we just wade in and try to create legislation, we really need to understand what we can create, how we can get there, and what we can do to make things better for everyone. And if we're able to do that. So I'm gonna just reference a couple things that we're gonna try to be working on the second part of our session. Which one of them? Again, I think you're aware of some of the farmers that have missed the deadlines as far as building new structures, and then they get a big tax bill at the end because they're not including in the current use. The second one is we're going to spend some time trying to figure out if we can get some rules put into place to include equine into the current use programs. So that's what we're working on. And again, please don't think that we want to attack you guys. We don't want any of that part. We just want to work with you.
Other than that,
we want to hear from you and see where whatever you guys tell us, we want to listen to, and that's where we want to go.
thank you. I'm Will Baker. I'm legal director at the tax department. Been there for 19 years. So I'm happy to lay out the law and rules. I'll be the law and rules guy today, and then Director Jill Remick is here, and she can kind of provide details of how it actually works day to day in the system and what we do in certain circumstances. It's maybe some of those things that I can't answer, but we're used to criticism on occasion. We didn't start work at the tax department to make friends. We absolutely haven't. Just to sort of describe the program a little bit, it's a large program. Almost 20,000 parcels are enrolled in the program. 19,800 covers an entire 1/3 of the state as far as land area. So it's a large program as far as administrative work next door. It's also a large program as far as cost. It's about $78 million in foregone state education tax and local municipal tax. And the municipalities are made whole. The payment is made from the state to the town. So there's no harm to the town budgets if someone enrolls or comes out of enrollment. It's the same as far as the town is concerned, as far as their grand list of what they raise on their credits. So it's $78 million of revenue, but there's no free lunch. So that $78 million is redistributed to all the other landowners in the state via rate setting for all the other property owners. Right, that's made up that way. And then the rules sound so straightforward, and I could go through them in probably 30 seconds. But the devil is in the details, particularly mixed use things. What we might consider hobby farms, gentleman farms, small operations. Those are really the tricky ones. But the rules are fairly simple, particularly for land. If you raise crops for sale, If you pasture livestock, that land is enrolled, period. Horses, land is enrolled, period. It's a little bit different if you're under 25 acres. There's an income component to that. You have to make over half of your income from farming, generally speaking, or you have to raise at least $2,000 of grounds. The buildings are a little trickier, not a whole lot trickier. And the land has a set value, and that's taxed at a use value, which is set annually. So the farmer does pay property tax on the land, it's just at a reduced rate. The buildings are taxed at zero if they're involved, so no tax on the building. So that's a substantial benefit. And so the threshold to get in to the program is a little bit higher. And in that case, you have to have over half of your income from the business of farming to enroll those farm buildings. So that there are some additional requirements there to keep what we all think of should be enrolled in the program. And so that might be a good segue to the equine properties a little bit, that building discussion. I know you said new construction first of the equine, but why don't I just hit that one first while we're talking about the buildings. Since I've been at the department, we've had questions from the horse property owners, we've had applications, we've had a lot of legislative interest and testimonies you probably heard for many years. Just to be clear, there's nothing about horses in the current use law. The law doesn't say anything about kinds of animals or even kinds of agriculture, right? The challenge that the horse properties see is on that business of farming issue. And so the land, generally, if you pasture livestock, including or pasture horses, that's enrollable. So the land is enrolled. The buildings, like I said, can only be enrolled if you earn half of your income from the business of farming. And so that's where it gets gnarly here. So we have two common issues that we see with the horse property applications. One, there's just way too much income off the farm. You know, the cardiologist has horse farm income from off farm is way in excess of anything on the farm. So those, hobby sort of farms not enrollable in the program. That's one. That's what I say the easy one.
Right.
The other one is this business of farming definition in the law keys to Internal Revenue Code definition of farming. And that generally means you have to engage in raising agricultural crops, proper products for sale, and you have to engage in it for profit. And so when we get an application like this, we make two columns for the horse properties. And one column, which is business of farming, is like breeding fees, raising and selling horses for sale. That's all business of farming. We all agree that's business of farming. However,
boarding.
No. In the other column is a lot of ancillary activities that occur on the properties. Boarding, lessons, summer camps, carriage rides, sleigh rides, horse shows, competition, judging fees. It's a big one. And so that income often dwarfs the breeding stud fees, the raising and selling of horses. Not always. If it's more business of farming column, they're involved. If they're not, they're not. And we've had several applications over the years. They've been challenged. We've gone to court, and our interpretation has been affirmed by the court. So that's where we are right now with that interpretation. We can't deviate from that. That's what the law says. That's what the court says the law says. And so in order to enroll the equine properties, we would need legislative change to expand the business of farming definition to include whatever you want.
Can you go down through those two columns again?
Yeah.
Can you just explain those two columns too?
Pretty easy. There's the breeding and
raising.
What are they called? What are the two columns called? One's A and B, or one's
business of farming, and I don't know what we'd call the other one.
and
Non-farming activity. Yeah.
and so non-farming as far as boarding, as far as employees that they get or doing right, they don't count that as income for the farm.
That's right, because it's not raising and selling an agricultural crop or product for sale and engaging in it for profit. There's no products, cheese, et cetera. Or
Polls, in
Right.
this case, polls.
Yeah, raising and selling horses absolutely is business of farm. And a lot of, stud fees could be.
But as far as the other part of it, the service part of it, as far as boarding horses
Yeah.
and riding lessons and such as that,
Yeah.
that just doesn't make the grade.
That's
As far
right.
as where it is. So if we wanted to do something, as you said, we would have to integrate the two and say, okay, well, here's the new definition.
Yeah.
To comply under current use program, this is what running a horse farm would have to look like.
Yeah. And we understand the argument that these folks need to do the lessons and boarding and training to make the operation financially feasible. I totally understand that, but we have to follow the definition of the law, which is what it calls.
What are we gonna run into, that's precedent set in law, not so much as set in law. But what are we gonna run into if we decide that is where we need to go with that? What else are we gonna run into, bump up against that's going to say, no, you can't just make that change. And then all of a sudden, is there something else that's there as well?
As far as we're concerned, we would just request very clear definitions of what the legislature wants, in the circle and out of the circle. As far as business and farming, clear definitions on that. I saw some language circulating this session, and most of it was fairly clear to me. One sort of clause said equine assisted activity, and that gave me a little
Heartburn.
a little blood pressure increase, just because that's not clear to me. We've had cases where we've had therapists who work from home and have horses. They integrate horses into
Yeah.
psychology therapy, and that's that we haven't seen on the current use side. That's actually on the income tax side, as far as what part of your home is engaged in your business. But anyway, that kind of stuff, that would be a gray area that would be very difficult for us if it wasn't clearly, in the circle or out of the circle, or very well defined. So I don't think you'll get a lot of pushback from us about this. Speaking frankly, I think what you would see is that there's going to be a revenue estimate attached to this. Of course, barns and riding arenas are very valuable, and so there'd be a revenue cost to the education fund that is associated with it. So I think in this building, that's where I think that's way more of a challenge than as far as us administering a clear definition of this kind of income.
Yeah, thank you, Mr. Chair. So we'll, hope I'm not opening up a can of worms. There are other businesses that cost to shift. Hospitals being one that we just went through on the floor. They do certain procedures which don't make them money, quite frankly. I don't know what those, an appendectomy, I just picking things out of the air. Mostly because Medicare and Medicaid don't fully reimburse the hospital for the cost. So what they do is they pick other procedures and raise the cost so they can bring it back to level. Is there an issue if someone that was involved in the equine industry made it more expensive for breeding, stud fees, that kind of thing, in order to bring up that 50% threshold that you talk about, and in essence, satisfy what they needed to do in order to be able to enroll?
If they had a way to increase revenue from those what we call business and farming sources, and it goes over 50%, then they're enrollable. So it's really just a matter of under current law, it's enrollable if that exceeds 50%. So I'm not, whether that's realistic, I don't know, but That's one way to do it, increase
Just
revenue.
thinking
on
like a
that side.
businessman.
The other way to do it is to change the law.
Yeah.
And, to push some of those activities, some or all of those activities over into the other column.
Allow.
And Richard,
Okay.
No.
So this is the other part, and I realize that we're talking, as soon as we monkey with this in any way, we are increasing foregone revenue loss, which would have to be backfilled somewhere else in order to keep the education, fund whole. Do you have any idea what percentage, in other words, if we all of a sudden opened it up a little bit more, is it noticeable? Is it, to use a phrase that's often used on the floor, de minimis, or are we talking about really fundamentally changing?
Yeah, it kind of depends on how much of those items you shift over to the other column. If you shift over all of them, it's just more of a, more properties are going to be enrolled, more foregone revenue. We don't think it's de minimis. If you look at sort of all the horse farms across the state and all the value there, I would think it would, be in the millions. It wouldn't be de minimis.
Okay.
You mentioned like writing and construction and that nature, and a lot of kind of entertainment type of things. And I guess what I'm thinking also is farms have people come out and like medical or things that and broadly you can almost say that that's almost entertainment to a certain extent. How would that be considered?
are you talking about, Senator, like the on-farm accessory type
Yeah,
of businesses
yeah.
that we see as far as with other things?
Yes.
Yeah. So here we're wading into the more difficult areas of current use. When I said before that the rules are easy, except, this is where we get into some of
You're
these
welcome.
things. Yeah. Apple picking, that's a agricultural crop for sale. So that, we don't see that as a problem, even if it's sort of an event that families come to and sort of have a fun recreational time in addition to getting the apples. I think we would just put that all in the business farming bucket. There are, questions of wedding venues.
Yeah.
Where it is a barn. It is used as a barn for animals. And a couple of times a year, there's a wedding there. So we generally, as long as the predominant use of that building is for the
Yeah.
animals, then we let that in. But yeah, you could construct a hypothetical where it'd be there. We can get to a point on the spectrum coming from both ends where it's a gray area and we'd really have to examine the application if we got an application like that.
So I have some burn with current use, and I know what it does for my farmers, but I also see what I would call as abuses. One is I sell a large parcel to somebody from out of state. They come up here and they love that 100 acres, love it. They love it. And they bought it because they wanted to own 100 acres, and there's no current use on there or land trust or anything like that. And then their neighbor comes over and tells them, "Oh, did you enroll in current use?" "Well, no, I didn't. What's current use?" "Oh, you save on your taxes." And then they just enroll in current use. And then for me, that is a stain on the system. I don't think that was ever intended. Wasn't intended for that, but it happens a lot, especially I've seen in my business. What I would be interested in doing, if you were allowed to do this with us, is to tailor a program with your language about how we could include modified equine businesses, and allow them to roll into current use, understanding that we are going to have to change some of those rules and laws. But I do not want to create a carve out for wealthy people to buy some horses and to be enrolled in that system and take advantage of it. I think we've already got enough of that.
Yep.
So are you allowed to work with us about with stuff like that?
We certainly can work on, draft statutory amendments and things like that to get at that. And I'll just mention that, the testimony that you heard earlier this session, if you kind of had some like dissonance in your head about like, why is this so hard? What is the problem here? Why is this so difficult? I would just mention that, you know, in those cases, those were like legacy commodity dairy operations that we all agree, generally speaking, are properties that should be enrolled in the program. However, to get at your point, over the years, the legislature has identified this issue and enacted certain hoops. I think the testimony was, you know, gotchas and deadlines and trip ups. And the legislature has enacted those things to get at those properties that are marginal. They're not trying to get at the dairy farmers. And so when you have a dairy farmer that has had problems administratively with the program, that's where it's like, why is this so difficult? And the reason is because that these kind of conditions and rules and thresholds that are built into the law weren't intended for the dairy folks. Those were intended for those more difficult properties that it's like, well, do we really want that property enrolled as a question of policy in the state? Do we want that enrolled in the program? And that is certainly in my head, that's, you know, I get that dissonance when I hear from property owners that absolutely should be in the program. Like if you looked at their property and if you looked at the law, it's like, yeah, that's a fine, that should be enrolled. And that's the struggle. And I'll just add I know you want to talk about some of the more customer service aspects and kind of enrolling new construction and things like that. I just add that like unresponsive taxpayers are one of our greatest challenges, whether it's current use, the property tax income sensitivity program, the renter credit, all those things where there is a benefit to the person. We're not just, you know, calculating their tax liability and collecting it. That is our greatest challenge, is unresponsive taxpayers. And we try very hard to, we send letters, we send certified letters, phone calls, voicemails, emails, and we think we're doing everything that we can. And we still, on occasion, arrive at these situations where someone otherwise could be enrolled, but they've not provided what we've needed by the deadline that the law says. A lot of these deadlines are in the statute, they're not constructed by the tax department. And I'll just add that PBR is very proud of its customer service, and we have a lot of technological tools that are provable. We can go through each case. We record phone calls. We have audio. We can prove all the audio files of the phone calls and voicemails that we've left. We have a very sophisticated Amazon Connect call center system that a lot of state agencies have. Our department-wide wait average is 71 seconds. PVR this past March of 2026, they received an average of 395 calls per day, and the average hold time at PVR was 25 seconds. So there was testimony about waiting 2 hours on the phone, and that if that occurred, that was a glitch of technology. That was not a customer service problem. Our kind of expert in our building on the Amazon Connect system says that, first of all, periodically you get the message when you're on hold that says, if you'd like to leave a message, and we will get back to you, leave a message. But also we would kick off a call way before and after 2 hours.
Right.
So like that must have been some technological problem.
And I don't want to spend a lot of time on that. I agree, you know, all what you've said with that. And I think that the point is from testimony is probably been made. What I would like to just kind of pivot to, and I agree wholeheartedly with what you've said as far as the non-response. It's frustrating for everyone and all of that. And I do agree that there is some blame to be shared on that side as well. I also am very sympathetic to the farmers, to where especially the ones that haven't made the jump, as some of them, to where, okay, we have somebody dedicated to that, and they should know how to do that. And shame on them that they didn't, because there's a lot of farmers that are juggling too many things, trying to figure out all the regulatory process of it. I guess where I would like to see some change would be this. Okay, you missed a deadline. You're gonna lose $34,000 this year. But I think that everybody's kind of figured out that they're gonna lose $34,000 this year. I wish that they didn't. I wish they'd say, okay, you filed late. I'm gonna assess you a penalty. I'm not gonna assess you $34,000. I'm gonna assess you 5. And then if you don't comply, next year you're gonna lose another $34,000 that you didn't think you were gonna lose, because I need you to get on the stick with that. I wish that once the mistake was made, that there was a better system to where, okay, you didn't register in time, you're gonna lose the 34,000 this time, and you're definitely gonna lose the 34,000 next time. I wish there was a mechanism in place to say, you screwed up. Let's work together to try to fix that. And maybe you have that, and maybe we're not hearing that. And Senator Collmore.
Yeah, along those lines. So right now, there's an annual application or registration. And I'm assuming that there's a fee attached to that, which you need for administrative purposes within the department or division. But if it was every 3 years that you had to do it, how much of a impact would that have on your own administrative capabilities?
So there isn't I think some of the challenges that you've heard from our folks trying to enroll a new building, things like that. So changes to the property.
Okay.
There isn't and Director Remick will correct me if I'm wrong. She always does. There's no annual fee.
Yeah.
The Ag Cert is
But they have to apply for continued.
no, there's an annual certification that has to be filed. That will not kick you out of the program. Now, I don't think those are the problems that we're talking about.
I thought we,
There is there a fee for that application?
No.
Oh, go ahead, I'm sorry.
Jill Remick, Property Valuation Review of the Tax Department. It's an annual agriculture certification. There's no fee associated, but yes, certain parcels, there's about 7,000 parcels every year that are agriculture only parcels that are sent this certification. They have to send it back to us to basically say, yes, we are still eligible, or our address changed or something else. That's due every November 1.
And I think the one that we're talking about, and I think what Senator Collmore is talking about, is where the farmer in North Troy got caught up because he was building the barn, and at that point in time, it automatically thought that was enrolled in this application
Yeah,
process.
so that was a new building, and so you're right that the law said there's no fee associated with applying, but if you have a new building, you need to apply by September 1 to enroll that building for the following April 1. The construction doesn't necessarily have to be completed on September 1 because it's for the following April 1 grant list, but we do need that application in. The law says it has to be in by September 1st. If the farmer is severely ill, it can be in by December 51st. That's all the law says about it. That said, if we get an application in and we have questions or something missing, we reach out to the landowner to get that information. I think what happened in this case is, we work in connection with the listers and assessors in the towns. So that work has to happen because like I said in the very beginning, the municipality receives payment. So if you build a farm building, the town is going to value and assess that new farm building, just as if any of us built a new garage or whatever. And so the town is they're going to attribute a value to that and assess it, and they're going to collect the tax on that building. It's just that if everything goes to plan, they're going to collect it from the state. Now, because the farm building is taxed at 0. So the state is going to, so to speak, pay the property tax for that. So the towns, they have to just continue on with their listing, assessing, reappraisal activities all the time for all property. And so that's what they do. And so in this case, it's not that current use identified. We can't act on anything for which we have no knowledge. So the lister identified the new building, put it on the tax bill, and then the tax bill was received. They thought it was a general increase in property tax, and there may have been some component to that. But this is the substantive point is that there was a new building that was in
One
the-
second, just one minute, Steve. No, it's.
on the bill. And so, then the individual said, what is this? And it turns out it was a new building that hadn't been enrolled. And so that's the issue here. So the towns need to continue with their assessing activity because they have to get it accurate for their municipal grant list.
And I think what's going on, Will, is that, as, there's pressures, in government to make it statewide listers and assessors and all of that, that they're starting to lose those relationships with towns that used to stop by and say, hey, you gotta get that building in.
Yeah.
And so we're missing that. And so I'm hoping that if that process has happened in the way that it has, and I think that that's probably what happened in North Troy. I really do. I know those folks well. But again, there's blame on their side. Especially because they did have somebody that was supposed to be watching out for that as well on a higher level as well. But I just wish that there was a mechanism that says, okay, you guys screwed up. It's gonna cost you. So where can we change that law a little bit with you folks that to help through that?
Yeah, so we do remind everyone every year, we have a mailing in June that says if you've got something new, you have to enroll it by September 1. So we do send out that reminder. I know that there's a bill circulating earlier this session about sort of a concept where if property's already enrolled and there's something new that's built, it's just going to be there's a presumption that it's going to be enrolled, unless and until the owner notifies the state that it's not used for farming. Really, I see two challenges with that sort of conceptual, with that sort of methodology for a program. One is that the town still needs super accurate assessment for the municipal tax collection because they want their hold harmless payment to be correct and at what it should be, not a penny less. And so they need to continue with that activity. And if a structure is built on a property and it's just simply going to be enrolled until we hear otherwise, then that system breaks down a little bit at the local level. And then also, I'm not aware of any tax system that functions where taxpayers have kind of we set liability, and then it's on the taxpayer to report in future years if their tax liability should increase. That's not how it works. For income tax, we have the annual calculation of your tax liability, and so the problem with the landowner determining whether a building is no longer used in farming is that is a factual and legal analysis that happens at the tax department. And sometimes, but not always, it's complicated. And so like the horse categories of income. And so to leave that to the taxpayers to decide and then report to the state when they feel that it's no longer used in farming, I would worry about the integrity of the program in situations like that. It's sort of like a town saying, we're going to do a reappraisal, and then we don't need any listers and assessors anymore. We're just going to do a reappraisal, and then everyone just report to us when there's an increased value on something that you've done on the property. I think a system like that would break down pretty quickly. So maybe the answer is some sort of late enrollment period for the building. Like I said, it's not that the building has to be completed construction by September 1st to enroll. So what you're really talking about is some sort of true up or
Right.
What a period of time for which a current use analysis of a property can be amended even after
Yes.
the property tax bill has gone out.
We'd be interested in language from you so that we're not getting into your business. That's what we'd be interested in.
Yeah.
Tell us what that looks like.
Yeah.
And that would be suitable for that. And I get it. I go back to exactly what you said when you first started your testimony. It's a lot of money. $87 million, a lot of money, a lot of parcels. And it's not up to you to be chasing all of that stuff. It is a benefit. It is something that is going to save you a lot of money. You need to pay attention to it. But we do make mistakes. And if we could get some true up language from you as far as the people that missed it, put in the penalty that you wanted there. Maybe it is all the $34,000, or maybe it's just $5,000. Don't do it again, because then after that, here was your one chance. But we would look to you for language like that would work within the confines of current use and not take away the bite of what you guys need to do. You have everything you've said to me, I understand and I agree. I do. It's not up to you to save somebody money. But people do make mistakes. And I wish that there was a true up way to minimize that without, not to say that it's not gonna cost them something. Sure.
So you covered some of what I was gonna ask, but up in Troy, the builder, the owner actually talked to the new listing outfit. And the lister was basically said to him, yeah, I knew this was gonna affect your land use, but it wasn't up for me to tell you that it was going to. And he could, whereas when it, just like you were saying, when it used to be Bob was my lister and came to my farm, Bob's like, hey, make sure you put this in your current use because I'm gonna assess it. So I don't know if we can put in the law that the listers need to notify that whatever building is, it's like, hey, we're letting you know that we're sending this up to the tax department. It's up to you. Make sure whether the buildings are done or not. If you don't build a building, it doesn't cost you anything to still say to the tax department, right? Hey, we may be building this building. Here's going to be the footprint. Because you don't pay out the money till the town taxes you that money, correct?
That is right. Yeah.
So that's kind of trying to get it before it even starts.
And
The law that the lister needs to inform anybody that's in current use that just drop you a note, you better add to your form that you're building this building. Doesn't need to be completed, but you need to add to the current use that this is a project that you're starting.
And I see where you're going with that, and I agree with some of that. But at the end of the day, I really have to agree with the tax department that it isn't up to us to chase it. It isn't up to us to chase your money that you are going to save or the project that you're doing. But here's the rules. You gotta do the rules, but you screwed up. I'm looking for that where I made the mistake and please help me fix it. And yes, I need to pay something. I get that, but I don't need this to go into the second year. I don't need this mistake to compound because of the one time I made that mistake.
It usually doesn't go into the second year, because the landowner has identified the increase and there's plenty of time to re-enroll for the following year. And that's like from the legal framework, that's what happens. You apply by September 1st. So as soon as we got those complaints from these taxpayers, it's like, well, yeah, if we have everything we need, we'll re-enroll you. What that means is it's an annual process, so you're re-enrolled for the following year. So it really sounds to me like it's a current year problem, and it sounds to me like this is really it really the new construction that is?
I think it's more of a go ahead.
Rob, it's just because we had the other farm that his parents died.
Right, that's what I was going.
He didn't realize, or they didn't realize that they figured it just stayed in. But it changed, deed name changed, so that it doesn't.
Yeah.
And they ended up, that was a significant amount too, wasn't it?
It was a very significant amount, but I think, well, the answer to your question is no, it's not new construction. I screwed up. Okay, it's gonna cost me something. I get it, but how do we fix it?
I think Director Remick can probably help us a little bit about on the interactions with the listers and assessors and how if there is a transfer of the property, how we know about it, the tax department of what we do.
And I just want to say one thing, Director, and I apologize.
No.
We are losing services to our towns the way that they are starting to go. And we are, and I do agree, and I do believe what the farmer did hear from that person. It's not up to me to tell you that. We're that other town person who they go to the diner together, or was more apt to say at the diner, hey, Reg, you gotta get that building in, let's go. You know, we're not getting that anymore, and we're not gonna do that anymore. So I think we're gonna see more mistakes being made. Because that other person is just contracted to do the job, and they're feeling the same thing. It's not up to me to babysit you. You're supposed to know that. You are supposed to know that. My job is this. And so we are going to lose less service and to help us to get there and to remind these folks. And so that's.
And I just, the thing that doesn't feel right is the gotcha part of it. You know, that's what just does to Senator Ingles. I just, you know, maybe a bleeding heart, but you know, it just doesn't feel right to me.
Correct.
I mean, if I may, that is not at all how the tax department operates.
I'm no,
in any way.
I'm not saying.
I want to be clear.
And there's a difference from what I'm saying in that yes, absolutely you should know. And I purposely use the word feel in that. So there you understand what I'm saying? So there's a difference. And so I didn't want to put you on the hot seat or put the department on the hot seat in any way, shape, or form. You're doing your job under no, absolutely understand that. But that's, like I said, I'm a bleeding heart.
So I can add a little, if I may,
You please.
Jill Remick,
Yes.
Department of Taxes. There are, I mean, to your point about listers and assessors, that is a very real consequence of the changing of the guard and losing listers and assessors. And we're seeing that not just in current use, but just for all kinds of things that the state of Vermont has municipalities responsible for, and there's no people there to do that. But there are a few different ways of communicating with taxpayers. So there is a requirement on the back of every property tax bill that references the current use program. And like, that's part of, I think there's a statutory requirement that we have a current use pay. This is an option for taxpayers to see if it's something you qualify for on the back of the property tax bill, crammed in there with a lot of other things that are required to be on the back of your property tax bill. Whenever there is a change in value, whether it's a current use parcel or not, the town sends the what's called like a change of appraisal notice. So they send a notice to the taxpayer saying, hey, we've changed your value. The taxpayer has the right to appeal that. And that's that's outside of current use. That happens for any change to property. And then there is also, if you have current use property, you also get a current use change of appraisal notice that says, hey, we've put this value on these buildings and this land. That is also something that's appealable. And then we do send, I wanted to clarify, there's the annual certification that I mentioned, that there's no cost to the landowner. That's a requirement for agriculture parcels. I think that was put into place maybe 10 or so years ago from the legislature, to sort of reach out and connect once a year with agriculture parcels to make sure that our enrollment is correct. And if there are any changes, this is a chance to let us know. I think that part of the rationale for that is that in forestry for current use, there's a lot of oversight. There are county foresters who they oversee and enforce treatment of forest parcels. There's a required forest management plan. So there wasn't any sort of comparable piece for ag only parcels. So that is why the legislature has us do that ag certification. It is a lot of mail. It's a lot of paperwork. It causes a lot of, concern. So on the one hand, I'd love to be like, great, let's get rid of it. On the other hand, it's been so long that I think now we would maybe cause concern if people didn't see that, because we get a lot of calls in late summer saying, have you sent my ag cert yet? I don't want to miss that, because it is under an enrollment category, but we do not remove people from the program for failing to submit their ag certification. So there's a few of those sort of point in time places where we do try to make that connection and communication, and that information is put out. I did want to add that, we process about 2,000 applications for current use every year, which is a microscopic number compared to what, like my colleagues on the fourth floor in our building are for income tax.
Right.
And the vast majority of those returns that are coming in for income tax, they go through the computer, there's checks and balances, out it goes. Maybe someone doesn't even look at it. Whereas the current use application is like, we have to make sure that the acreage that we have in the application matches the acreage that the town has, which may not be the case, or maybe there's an updated tax map, so the acreage is different. We have to make sure we have track of every building. So we actually list all the buildings in the current use program, but also the listers do on the lister card. So we're kind of trying to match one to one. It's like a Lego set. You got to click the other piece on top. So you need to have the land and building information correctly so we can match it in that application. Because then what happens is the lister assigns a value to those pieces that are either enrolled, and in a lot of cases, right, you might have an excluded 2-acre house site plus a home. So you've got to allocate the values on the lister card, which results in the property tax bill based on that application. So we actually we have people, the 4 people next door in our building, actually looking at every single application. We've got a light table for the map. So every application gets a whole lot of review by our team. And we do try very hard. We send letters and emails and phone calls to try to either remind the landowner or let them know we're missing something. I feel that we go, if anything, above and beyond, which like takes us so long to finish these every year, to try to make sure we've got the pieces and help people who are eligible to be enrolled and get enrolled. So there are a lot of, I would argue, opportunities for that sort of outreach. There's definitely not the application comes in, they didn't sign it, the map's wrong, whatever. No, we try to help everyone get it correct. So, but that being said, obviously there's 19,000 parcels. There's issues every year. It is true that most of what we're trying to do is working with the municipal officials, and there's not always a person there, or maybe if they are, they're there 2 hours on Thursdays. So we actually literally sort of have divided up our current use application review to try to line up with the specific towns. Like each current use specialist is assigned to a group of towns that they have that relationship and they know when that person is in. I worry a little bit about, I do think there are listers and assessors who make a point to say, hey, while I'm adding this to the grand list for 2026, this is on enrolled land. And if this is a building that should be enrolled, you've got to enroll it, because otherwise it's on enrolled land, and that's developing that property. I think there is that communication, but I think in the end, right, anything we can do to try to make even more clear in like our annual mailing and an ag cert, to have people know the consequence of that, rather than waiting until, this is not unique to current use, but waiting to get that property tax bill to go, oh shoot, I never filed my homestead declaration, for example. Like that's often where these things happen. But there are like points in time where the lister or the tax department has communicated or requested information. In part of this conversation, this session, we're talking with the Agency of Agriculture. We're going to add all of our sort of reminders and sort of, hey, don't forget to do this, to their weekly ag mailing. I'm sorry we hadn't been doing that before. It hadn't come up, but like they really feel like they can help us try to get the word out. I think that's a given with Forest Parks and Recreation because of their much more active role in forest parcels. So FPR has a whole communications strategy for forest land, and there isn't that sort of that sort of complementary outreach for ag. So there's definitely room for improvement and kind of finding whatever channel we can to get the word out.
Every application, every year you go
Yeah.
through. So that was one thing somebody brought up. It's like, I do this every year. Isn't there a way to do it every 5 years, being that I've been in it for 20 years? Is there a possibility, or there's still flaws that, like, if they, certain people put their land in and then just never take it out?
Right.
That makes your job very easy, but you still have to check it every year because.
Well, there's two things. There's the application, which is to either add or transfer or enroll land. And that has an application fee. And that's the whole process of the 2,000 year I'm talking about. The annual ag certification is a letter we send that they sign and fill out and send back. So
all
there's
they do is
two.
sign a letter.
Yeah, we
There's
aren't
nothing
looking at
more
all
to it than that.
19,000 parcels every year. No, I apologize. And another piece that I left out is when property changes hands and a property transfer tax return is filed, that the way there's two questions on that return about current use. Says, is this land enrolled in current use? Yes or no? If it is, do you want to enroll it? And depending on how folks answer that letter, the tax department sends letters that, hey, we just got notice that you've purchased property that is enrolled in the current use program. According to statute, you've got to submit an application or withdraw it and file that form. So we also do communicate anytime it changes hands. I do think we've the whole, like, a lot of folks are putting things into trusts or LLCs for financial planning and for estate planning, which makes total sense. And we haven't found a better way to sort of capture that transaction without folks enrolling when they become a trust or an LLC, because 10, 20 years down the road, when maybe that is now in place, there's a lien on that property and that entity is now responsible for the land use change tax to remove the lien. So we always want to make sure whoever owns the property agrees to and understands that their property has a lien on it. And if and when the time comes where they want to come out of the program or develop it or whatever, they're going to have to pay that land use change tax. And so it's not ideal. It's a pain in the neck for a lot of folks, but we haven't found another way other than to say, hey, when you put it into a trust or an estate or an LLC, we've got to get a new application so that we know who to contact, or, and that folks agree to the program.
So it would seem to me that there's a difference between constructing a new building. I know if I was going to do that, I'd have to have certain amount of permitting in place from the local municipality or somewhere that says, go ahead and build it. Yes, here's the stamp. And at that point, it seems obvious that you want to think about, hey, wait a minute, there's another step here. I've got to get a hold of the tax department and let them know I want this enrolled in current use. So I understand that part. The transfer that we're talking about, if the deed changes, there's gonna be a lawyer involved at some point. Why doesn't the lawyer say, by the way,
I thought you said there's a thing they check.
That's exactly what I thought.
Yeah.
It sounds like a lawyer problem.
Yeah.
Yeah.
Yeah, Rob.
And we integrate the property transfer tax.
Yeah.
With the current use program. So that when they're, like, as Director Remick described, when there is a transfer that we pick up in a property transfer tax program.
right,
We integrate it with the current use program and say, are you enrolling this? Are you taking it out? What are you doing? So, we do that. Notwithstanding whether their lawyer reminds them. That's an automated process that we get with our property transfer tax return.
It feels timely to say you've got us on the docket for the Vermont Bar Association's conference next month, so that we can actually talk to the real estate attorneys about current use more directly. Because it does seem like a little bit of outreach.
yeah, I mean, to me, that would be obvious too, if I were a lawyer, to remind the new landowner, if you want to continue, you've got to do this.
Again, sorry, Steve,
No.
just 1 second. Again, there's a lot of people that are at fault.
Yeah,
At the end of the day, it gets down to the landowner. There's a lot of people that can screw up. I think what I would be most happy with, because I agree, Director, everything you've said about the efforts that you take. And I agree with it wholeheartedly that you guys do all of that. But nonetheless, there's rules out there for driving motor vehicles and there's car crashes. There's rules of everything that you do, there's crashes. And when somebody crashes in this process of current use, I would just like to see there be somewhat of an insurance policy that gets them back whole again. It's going to cost them some monies. But this is the process that gets you back whole. And that's I think, a reasonableness that I would like to ask. And I don't want to change the whole tax code. And I do not want to make people that are and I don't want to make a chronic lateness of people that, well, whatever. It needs to be a severe enough fee that would say, well, no, I don't want to pay that. I just want to do what I'm supposed to do. I want to do on the dates that are supposed to be there. But if in fact that it doesn't because of a lister or whatever, lawyer or whatever. But here's what makes me whole again. Steve.
So I have a friend, his parents died. He built the house. Didn't realize he built part of it. So when he went to Risa, he had a terrible time of getting hold of somebody. And I don't believe it's in the tax department because land use has a separate department that you deal with first. Is that correct?
I suppose it depends on what, so current use, there is the land use change tax that we administer, but if there's any kind of,
Staying in the program, you don't have any, you don't,
if they have enrolled in the current use program and they built a house on enrollment, that would be us, yeah.
okay. So whoever he was trying to deal with, just what we heard, hard to get back with. Emails were terrible. You had to hit a deadline. He sent the deadline at, and he goes, part of it's my fault because I didn't realize I had to do all this. That when my folks died, I knew it was in current use, but I didn't realize I had to. So he does take blame for something, but he did have to say that whoever and I can find out the name that he had to deal with was absolutely terrible to communicate with, was not getting back to him, tried to make phone calls, wouldn't answer. And he's not the easiest person to deal with.
I'm sorry to hear that.
But I heard that, and then I heard the same story from the people up north that when their folks died, that they said that's the one you heard that they were on the phone for 2 hours. And being what I heard from my friend, I'm like, I can relate that could be either a technical glitch if you have, and it's nice that you brought the data that's showing, hey, this is what really happens when people call, and that's hard to argue with when you have good data. People are having an issue though communicating with, and I'll being that we're having this discussion now, I will follow up, get some names and say, here's who they were dealing with, here's how long it took. And I think the same thing happened up north there, that they sent the mail to the wrong address and nobody was there anymore. It goes, you know where it went. And that happens. And when you put something in the mail nowadays, you don't know if it's ever going to get there. So that was my concern. So it is in your department. So I will find you names and follow up.
Yeah, please do. I think also I would add, I am sorry to hear that. And the number is 828-5860. Hit number 3. I sit next to everybody every day we're in the office. So I really want to make sure people do get an answer. My number is 6639. So people will call the tax department. Like we do try. I do think there, sometimes it might be that the valuation or something is actually in the lister's office. And so we're waiting for that to come back. Once an appeal has been received though, then, and I'm not sure how this is communicated, but the sort of conversation, negotiation changing with an employee wouldn't happen anymore. That appeal is now getting like docketed and filed. And so there are periods of time once an appeal is in place that we wouldn't be able to communicate. But I would hope that would have been communicated to this person. So I'm sorry to hear that.
That would go to my team at that point to handle that appeal. It is true that there is no one-stop shopping here. There's no town office that handles valuation, permitting, and current use all at once. A lot of communities don't have zoning and plan. So you don't necessarily need a permit. I think it's 40
towns don't.
40 towns have no zoning.
Yeah.
So and we're seeing that the challenges with other areas of the education discussion in this building about classifications on the ground list and tax rates, that it's not the same across the state. I hate to use the word sophistication because I'm not trying to disparage smaller towns. I live in a town with no.
I do too. Our town does not have been called.
But it's not there. There's no permitting office because there is no permits other than your state home wastewater permitting. There is no permits, so current use can't wedge up against a program like that, and all communities to rely on new construction being alerted to everyone else that needs that information.
Understood. Do you have any suggestion to follow up the chair's ask that there be some sort of intermediate process that warning, you've messed up. Here's what you need to do immediately before certain date kind of thing?
Yeah, I think I would have to discuss with my agency and the people that know better than me about our interactions with the listing and assessing officials in towns. But I think, what we're describing is a period of time in which you can edit the current use treatment of a property, even though we're in the tax year, the tax bill has already gone out, and a reduction of that tax liability that the town is expecting for that landowner. Now, that involves a lot of moving parts at that point, because you have a property tax bill that's gone out, collection against the individual, you have a property tax income sensitivity adjustment that's been applied to that property already, and the tax rate in that town. There's a lot, as you know, that how we set tax rates is, there's a handful of people in the state that know exactly how that's done. I'm not one of them.
I think there's 7, you might be one of them.
No. So like there's a lot of moving parts to that. And that's one reason why that it sounds easy, but there's some complexity there in narrowing in on, okay, so you built 1,000 square foot little barn next to your big barn, and your property tax bill is $4,000. What is it now? Because the horse is out of the barn, so to speak, already with that property tax bill. It's calculated, it's out. The town has set their budget, the town has set their town tax rates, everything is done, the bill's out. And so it would be like a true up or an adjustment to that. I think that's really what we're talking about.
Yeah.
It's gotta be after the fact, when they have the property tax bill in hand.
Right.
We already have all this set up for editing the application and getting that all right in advance of that. But, tax bills go out July 1, and we kind of build back from there, this whole annual process of getting all this done. And it would have to be some sort of true up after July 1, maybe July 1 towards to the end of the calendar year. Where they've received their tax bill, they've looked at it, hopefully. An adjustment can be made, and I would have to go back and we would have to thread the needle of how that could work in our existing very complicated property tax system. I know that you know that it's very complicated.
I think we could be very happy with something like that. And the other would be just to have some language come back, work with us as far as to how we could change a bona fide equine business with a little bit of changes in what we consider business, which would include the riding, the way that they actually do make their money, which is to board horses and to ride horses with very pointed and strict way. I do not want to be a tax deduction for the rich. I don't want that. I want to be these people who are making their living, boarding and riding and such like that. And maybe I guess it would be another classification. If we could work together on some language on that, I would be very appreciative.
I think we would need to lean on others like the Agency of Agriculture for definitions of bona fide equine.
And I will chat with them and let them know the discussion, as you guys will as well. Yes, Maggie.
Maggie Lenz on behalf of the Vermont Equine Industry Group, we are here to collaborate on that as well. And
Okay.
they have put together a survey that we're waiting on. I'm not sure the exact questions asked, but potentially that could be something that would just help shape the discussion.
Absolutely. We want to include the stakeholders who are going to be the benefits of. So yes, absolutely. So,
On the equine, my belief and feeling on that is if they are baling hay, produce the feed that that it's all inclusive, that farm is doing that to make their living. That is truly agricultural existence. Now, if you're just boarding them, you buy all your hay, you buy all your sawdust, you buy everything is brought in. That's more of a business of not farming. That is a pleasure business, if you will. And I think that's where we could make a divide between that. Because if you buy the equipment to bale the hay, if you spread the manure, if you have practices that you're actually farming, not just tending the animal, I would call that land use, be able to follow your land use, because that's the whole, we had one young woman in that was saying that's all she does. It's how she makes her living. She doesn't have, her husband works outside the farm, but her income is all in the farm. And how that's not farming, I don't
Yeah, so just to illustrate some of the complexity that could happen, it's like if you envision an application based on that sort of structure. That would be an application where the current use division, which is a handful of people, would examine the consumption of everything on, for the animals on the farm. How much of that comes from the property itself, how much comes from off the property. That's an accounting exercise and an inventory exercise that would be expected of the landowners.
Yep.
And then the current use division would have to take a look at that too. So just to illustrate how it can quickly spin into
But there would have to be most of the input would have to come from the landowner who was gonna be the benefit of. And I understand that as well. And what I want to avoid is, I think what you'd want to avoid is the therapy aspect of it. No, this isn't a therapy pet. This is a business. And I think I see it more of just taking the two categories that you had broken down and which side it is. It's just moving some of these categories from the B side over to the A side and say, okay, now these are allowable. These are allowable. This is the new definition of horse farming. And so that's, and I know I make it sound very simplistic, but I understand the complexities that you're talking about.
Yeah, I think the Agency of Agriculture should consider that a little bit, because I would imagine that even in the equine community, there may not be agreement on what should be
Yeah,
in around,
well,
whether if you have to grow all the feed on site,
say
is
all.
one thing, or even the equine behavioral therapy. Some folks might insist.
No question
that-
they're gonna
So,
do that. But it's
these are
either allowed
policy.
or it's not allowed.
yeah, these are policy decisions that would need to be made by the legislature.
We'll make them and then they'll just have to battle.
Well, I want it even more than that. I want a partnership with you folks. I want a partnership with you, and we're gonna advocate for the equine farmer. They're going to make some demands of us as well. But, I think the best policy is always made where everybody gets a little something, and maybe not everybody gets everything, but here's our new rules, and we've heard you and we've made the change, but it needs to work for everyone. It needs to work for you folks as well.
Most likely she'd have to file with the IRS independent of her husband. Because if you
Yeah,
take the
want to be in
combined
land use.
income,
If you land use, you're gonna have to do the work. Make that work easier.
Anything else from my shoulders? Anything else from you folks?
Thank you for the opportunity to come in and walk
Thank
you
you
through
for
all of
your
this.
time.
It's a lot to do in the program.
The
We could
thank
be here
you
all
is-
week.
The thank you is for you folks. We appreciate what you do. We appreciate you coming in. Appreciate you hearing us out, and I bet we'll get someplace with what we talked about today.
and you must have some friends.
I think you came here and made some friends, so.
Okay, we have, we'll take it.
Thank you.
Thank you again.
Thank you, folks, very much. Committee, our next is at 10:45, so if you want, Linda, unless there's, that's the time they kicked out, right? Okay, so let's take a break until 10:45.